Welcome back, everyone. Today we're diving into zkSync, a project that's making waves in the crypto space. Built by Matter Labs, is a layer 2 rollup solution on Ethereum, leveraging zero-knowledge proof to scale transactions. Why does this matter? Ethereum's main often struggles with high gas fees and slow throughput, but its technology batches transactions off-chain and submits concise proofs to the blockchain, making everything faster and cheaper. It's EVM compatible, so developers can migrate their contracts easily, and the ZK token powers governance, incentives, and potentially fee settlements. As Ethereum's scaling needs grow, zkSync is positioned to capture a significant share of activity. Let's explore what sets it apart and why it's on everyone's radar. Now let's break down the fundamentals of the ZK token. Currently, ZK trades around 3 cents to 5 cents, with a circulating supply of about 7.2 billion tokens and a maximum supply of 21 billion. The all-time high was roughly 32 cents, so the token is trading nearly 90% below its peak. For ZK to see major upside, we'd need either a surge in adoption or a reduction in supply. The strength. It's part of the core infrastructure layer, and if Ethereum continues to scale, Layer 2s could be huge winners. However, there's stiff competition from other rollups, and the token's price won't move without real-world usage and ecosystem growth. Plus, the large total supply could limit price gains even if utility increases. It's a classic case of high potential but real risks. Let's take a quick look at where ZK stands in the market today. The token is trading well below its all-time high, with a market cap in the $200-300 million range and over 7 billion tokens circulating. This leaves plenty of room for upside, but it's not a guarantee. The current price action suggests that either the zkSync narrative hasn't been fully recognized by the market, or there are concerns about adoption. For a breakout, we'd likely need a major catalyst, think big protocol integrations, large-scale adoption, or even token buybacks. Until then, ZK remains a project with potential, but it needs real momentum to move the needle. Now let's get into the long-term price predictions for zkSync. In a base case scenario with moderate adoption, ZK could reach $0.05, 10 in 2025, $0.20, 30 in 2027, and $0.50 by 2030. zkSync achieves high adoption and becomes a major layer 2, prices could soar to $0.50 in 2027 and even $2.5 plus by 2030, assuming supply reductions and deep ecosystem integration. On the flip side, if adoption lags or competition dominates, prices may stagnate between 2 cents and 20 cents through 2030. Personally, I see a realistic target of $1.2 by 2030 if things go well, but hitting $2 plus would require a lot to go right. Remember, these are speculative numbers and depend on broader crypto trends, adoption, and execution. So how can you use this information in your own strategy? If you believe in the Layer 2 and rollup thesis, you might consider gradually accumulating ZK, especially while prices are low. Set a clear entry point and target horizon, maybe buying at 4 cents with hopes for $1 by 2030, but also define your exit plan if adoption doesn't materialize. Keep an eye on key metrics like the number of apps on zkSync, total value locked, fee generation, active users, and any token burn events. And as always, manage your risk, only invest what you can afford to lose, diversify, and stay aware of broader market cycles.